traders, this is Rob Reinhold. I will be flying solo this weekend. Ankit Sharma is out of town. So here we are, the Currency Room. Now this is your first time doing the Currency Room. It is not my first time. I recorded this on Friday after the markets closed. I had a little window before me and the missus had some plans, and I recorded it all. I did the entire thing from start to finish, and then I went to send it to production and forgot to hit the record button. So look, it's funny how these things go. Sometimes when you have to redo them, they're terrible. Sometimes they're a little bit better. We'll see how this one goes. Let's talk about what we're going to be going over in this video. We're going to look back at the previous week. We'll take a look at the news. We'll take a look at what the broad markets did. And we'll take a look at each one currency individually. Then we're going to go in and score things. Again, at Maverick, we are completely technical traders. So we score everything. Whatever that has the best score, we pair that up against the worst score. And that's how we find and build our trading setups. We're always looking for trades, but it's always based on finding where the relative strength and weakness is.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's get into the numbers here. So let's start off with what equities did. Equities continued their pullback, and the S&P pulled back to basically the 50-day moving average and a major support line. And so that looks good, but then the Qs blew right past those lines and actually are now below the 50-day moving average. We'll take a look at all these charts, but we may have to go from a risk-on sentiment to a risk-off sentiment, which will change some of the things we do in our currency trading. The 10-year bond is now at year-to-date highs, right up at 4.2. If we break out of 4.2, there's some major resistance there that goes back a couple of years. If we break past that at 425, that's going to be a clear breakout. We'll be looking at the 10-year chart as well. And cryptos, we've been telling everyone, don't even bother with them. And you know, it was a good call because they didn't really do much at all this week. They're still headed downward, more so than upwards, so we're just going to ignore them until they change. There wasn't a ton on the calendar last week as far as news goes. There were only 3 reports that mattered. Let's take a look at the first 2. We had core CPI and CPI out of the US on Thursday, and then we also got the PPI on Friday. So let's take a look at the Thursday one. As you can see, they came out as expected, but the year-over-year number dipped. Initially, the stock market loved that number, and the markets were up well over 1%. The Nasdaq was up like 1.6% at its high. And then all of a sudden, the 10-year bond started to spike, and the market gave everything it had gained on Thursday back. We have a saying at Maverick, we call it sentiment. I don't know if that's the right word. We've never been able to find what the right word was, but it was basically the mood, the sentiment of the market. And the saying goes, if good news comes out and the market goes down, the market didn't like the news. It was grumpy. And so what we had was we had good news that came out. Initially, the market celebrated it, but by the end of the day, the market had turned grumpy, and the sentiment is much more important than all of our opinions or whatever we think is going to happen. That was a very negative candle on Thursday. We'll take a look at the charts. Friday, then we got higher than expected PPI that put a little bit more pressure on markets. So those 2 reports out of the US were big, but I want to point out one that kind of slipped under the radar was GDP out of the UK. We're going to be talking a lot about the pound in this session. I've been pretty neutral on the pound. The pound's starting to poke its head out above resistance, and I think it could be the best trade of the entire week. This GDP up plus 0.5. That's killing the expectation. That might put the pressure on the Bank of England to be a little bit more aggressive. So let's go in and take a look at the actual numbers of last week. Looking at the numbers, we had the S&P down slightly, the world index down slightly, cryptos down slightly. I know 1.5 seems big, but in crypto land, that's nothing. Gold got absolutely hammered. Now, this move was simply because the US dollar went higher. As we know, there is a negative correlation between gold and the US dollar. When the US dollar strengthens, it is negative for gold. And oil bounced back a little bit, and oil has been a great trade. We've been bullish on the energy sector in our stock and options group for the last 3 weeks. I think the energy sector keeps going. Let's jump into the chart here. And this is everything I was talking about. Here we have this line here. We hit it resistance once, twice. We broke through it, and now we are back to retesting. And we retested the line, and we are right at the 50-day moving average. The market has to bounce here. At Maverick, we have a saying that if it's above the 50-day moving average, the market's bullish. If it's below, it's bearish. I know that's a little oversimplified, but it's a really good rule, and it's been a great rule over the 25 years we've had it. Here we are. We're right at these key levels. Question is, what does Monday's candle look like? And I don't know what it's going to look like. I have no idea. It is encouraging that Friday was a green candle. It was an up candle. We have more buyers and sellers, but that doesn't mean anything until we get, some confirmation to it. We need to get some confirmation that there's more buyers and sellers. And all week long, there were more sellers than buyers. And even on the good news, the best news day, they sold it right back down. I personally believe, and again, this is just my belief, and I've been wrong plenty of times, so take it for what it's worth. A lot of times when we see these bull markets and we get these deep pullbacks to the 50, and pull up a chart in 2021 when we basically were in a bull market the entire time, we had a couple times where we pierced the 50-day moving average. Now, a pierce means it goes down and recovers very quickly. I think that's what we're in store for. I think we are going to get a pierce. It freaks people out. People panic. People sell. And then once those people sell, the weak hands, the market bounces right back. Again, that's just my opinion for what's likely to happen. If you're bullish the market, what you don't want to see is it go below the 50-day moving average and not recover. That is going to force us to change our outlook to more of a negative outlook than a risk-on outlook. Taking a look at the Forex numbers, we liked the yen short, and it was a great short this week. And we also liked the Kiwi short, and it was a great short this week. Now, we've been really enjoying the Euro and Swiss franc. We've been trading mostly long Euro Swiss franc trades, and it's been paying off well. And look, they still did well. They weren't the best last week, but I know I paired up Euro yen on a trade, and I paired up dollar yen. We're going to take a big hard look at dollar, and I think the dollar is possibly ready to rip higher. We'll take a look at it. I also want to point out the pound. The pound was the second strongest currency last week off that better than expected GDP report. If we come over here, look at the numbers in crypto. Okay, 1%, that's basically flat. Crypto is not doing anything whatsoever. Would having more trading capital help you meet your trading goals? Maverick Currencies is the oldest US-based Forex and crypto prop firm. We fund traders just like you with 5- and 6-figure accounts where you keep 70 to 80% of profits. Click the apply link on the top right of this video to start the process. This will take you to a 4-minute video that explains the trader position, and you can read a list of FAQs that answer pretty much all the basic questions you have. After that, if you're interested, fill out an application, and then you'll watch the full-length recruiting video and schedule an interview with our recruiters. Are you our next trader? Let's see if we have an update to our scores here on the market. If you remember, last week we were at a +1, and here we are, we're at a 0. Our rules are, if it's below the 20-day moving average, it's a -1. If it's above the 50-day moving average, it's a +1. As you can see here, the 20-day moving average is now starting to slope down. So we got one moving average sloping up, one down. That's a 0. That gives us a 0 score. Now look, there can be two types of zeros. There can be lethargic markets that haven't really gone anywhere for a while. I don't think that's what this 0 is. Or there's markets where that we're at a +3 and simply are going to -3, and 0 is just a stop along the way. It could be one of those, or in my opinion, I think it's one of those, we were at -3, we go to 0, and then we strengthen it back to +1, +2. I do think we get a bounce in the markets, but I do think there's going to be a challenge, that piercing that I talked about first. Here is the US 10-year bond, and you can see here we are inching up to 4.2. I've got 4.25 as a point. Above that, the stock market is going to struggle, and the dollar is going to follow it higher. So really, I think the play here on the dollar is really all about US interest rates. Here's our currency basket on the cryptocurrencies. You can see here that nothing is going on here. We had a little bounce. It turned right over. Until there is an up market, we are not interested whatsoever in cryptos. Let's finish off with the calendar this week. We've got Canadian CPI. Canadian CPI on Tuesday. And we've got US retail sales on Tuesday as well. So Tuesday should be a good trading period. And you can see Tuesday night, we've got RBNZ at 10 p.m. So look, if you're trading CAD or the Kiwi on Tuesday, you definitely need to be watching out for these announcements. I want to point out two reports that I'm really going to be watching this week. I do think the pound is likely to be the best performing currency this week. We've got the employment report, the claimant count change on Tuesday, and we have CPI on Wednesday. If these numbers come out better than expected, think about where the Bank of England is. Look at this inflation rate, 6.8%. That's so high. That's higher than lots of the other countries. If the GDP is cranking higher and employment is strong and this CPI remains high, I think there's no choice but for the Bank of England to get a lot more aggressive. That's why I do like the pound going forward. If these numbers come out hotter than expected, I think they absolutely rip higher. One last report to talk about. We've got Australian employment change on Wednesday night. So as you can see here, Tuesday and Thursday are the days. I think those are going to be the days where you want to be the most active. I think you back off maybe at the end of the week. And I think you start the week off not really looking to jump in anything right away. So let's go in one by one and score out all of the currencies, and then we'll pair them up to make some trades. Looking at the cryptos first, I'm going to blow through these real quick because I don't even want to show them to you because I don't even want you looking there. So here we have Bitcoin. It's between the 20 and 50 on a daily chart, not going anywhere. No thanks. Looking at Bitcoin Cash, doing the same thing, and no thanks. Look, there is no opportunity to make any money as a directional trader on any of these. Ethereum, no thanks. Just nothing going on here. And then we come to Litecoin, and Litecoin looks the worst. So yes, Litecoin is the worst. It's low basing, likely to head lower. But look, none of the cryptos look good here. So all of the trades should be in the Forex space because the Forex looks great here. And let's start it off with the US dollar. The US dollar has been trading in a pretty wide range here. This is the US dollar basket that we use, evenly weighted against the 7 other currencies we trade. As you can see here, we just knocked out that resistance and we are heading up towards the next resistance. Past this resistance, this was the high we made in May. If we blow through that, I'm telling you, there is nothing as far as resistance goes. So I think dollar is looking really good here. And frankly, it ended the week with a ton of momentum. I think going into the week, I think dollar should be on the top of your list. Maybe not the tip top, but definitely on the top of the list for currencies to go long. Next up is the yen. And the yen, you can see here, we had this little blip higher off this low. We ran up. We've really been basing here. A drop below this is just a green light to go short yen. Here's the problem. I said it's a green light when it happens. Right now, the yen is showing a little bit of a little bounce here. If we get a turnover next week, I think you can absolutely go short yen. I do have yen as the best short out there for the week. I love the dollar, but guess what? It's not at the top of the list because this is what's at the top of the list. This Swiss franc is a beautiful, beautiful chart here. We had a big run up. We consolidated, gathered up energy, and we're breaking out. Everything looks good on the Swiss franc. It's a +3 on the trend and a +3 on velocity. So at the start of next week, I am looking at Swiss franc long trades. Now, I may back off of them as they go through the week. Maybe they get a little overextended, or maybe it pulls back. But look, at the first of the week, Swiss franc has got everything going for it. And let's talk about this. If the stock market crashes and it goes down below its 50 and it doesn't recover, that is going to be a risk-off move. The Swiss franc is a risk-off currency. A weakening equity market is even going to help the Swiss franc even more. So this trade is looking really good here. We also really liked the euro, and the euro did just fine. As you can see, it broke out of its resistance. Okay, it topped out a little bit. It needs a little bit of a pullback. So the euro doesn't have as much momentum right now. But look, this could easily be a good trade Tuesday, Wednesday, Thursday. If the Swiss franc really powers on Sunday, Monday, I think the baton passes to the euro. I think both of these trades look good. And then we come to the pound, and here's another just great looking chart. We had this big run. After big runs, it's like going on a sprint. Do a 100-yard dash. You've got to stop at the end, and you are huffing and puffing. And you've got to gather up your energy before you can sprint again. We are just about to break out. So I am not ready right here, right now, to jump on the pound bandwagon, but I'm so close. What do I need to see? I need to see like one more candle up above this resistance point. I need to see it actually hold above that resistance. Then I think it's a green light. So even though I do love the pound, I think the Swiss franc is still a better trade at the first of the week. But I think at the end of the week, the pound is likely to be the best performer if those reports come out stronger than expected. All right, Canadian dollar is trend at a 0. That's all we need to say. We don't need to say anything else about CAD because as technical traders, that's all that matters. There is no trend at the moment. If it changes, we'll talk about it. Until then, we won't. Here is the Aussie. All right, the Aussie has fallen, but last week it based. Let's take a look at the Kiwi, because the Kiwi last week it based, and then it took a fall. It seems like Aussie and Kiwi are taking turns being the worst one. So since the Kiwi had a big fall last week, I think the Aussie looks the best. So I also like Aussie short quite a bit in the markets. I think the Kiwi is likely to do exactly what the Aussie did this week, base. So I'm looking at more Aussie trades. When we look at the trend scores, it's pretty clear. Swiss franc is trending the hardest to the upside, yen is trending the hardest to the downside, followed by the Aussie and Kiwi. If you don't want to take a look at Swiss franc, I think you've got three currencies that look really good here. Pound, euro, dollar. They all look acceptable. What's moving right now? What's got all the momentum behind it? Right now, Swiss franc and pound have got the most momentum on a shorter term chart. And on the downside, Aussie and Kiwi. Take a look at where the yen is. As I said, the yen is my favorite short, but I'm not going to be starting the week with the yen at the number 1 point on my list. I'm going to be starting with Aussie at the number 1 point on my list. So this makes it really easy. I'm going to be taking a look at two currency crosses at the first part of the week. Aussie Swiss franc and pound Aussie on the long side. So let's go take a look at those two currency crosses. And then, of course, on Monday afternoon, we'll be updating all of this with our daily outlooks. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? Let's pair up my favorite long against my favorite short, which is Aussie Swiss franc. As you can see here, this is the daily chart. It looks atrocious on the daily chart. I mean, take a look at this thing. We had a low base, and now we've broken down below the bottom of that base. This thing looks really good on the daily chart. And if you take a look back, okay, when's the last time it's been down in this range? You've got to go back to COVID. We've got to go back to the panic of COVID. That's how extreme these levels are getting. When it gets to these extreme levels, you get larger and larger moves. And yes, you do get reversals at some point with large moves. But on the way down, I really like this on the daily chart. If we come here to the 4-hour chart, looking at the 4-hour chart, everything just looks really good here. We just broke down below this base of about the last 3 days. So this for me is my number one trade, Aussie Swiss franc. You're saying, hey, you know what? Maybe I don't want to do Swiss franc. Fine. Let's take a look at pound Aussie. Pound Aussie doing something similar. We've got this nice uptrend. Let's take a look at it on the daily first. So again, the daily chart's looking really good here. And this is what I said about the pound. I need one more candle. I need one more candle to really be excited about pound. So look, I'm going to be looking at Aussie Swiss franc. If you want to take a look at pound Aussie, maybe on Monday, Tuesday after one candle, okay. I just think it's a little premature here on pound Aussie. The one other pairing that I'm definitely watching is dollar yen. I had a nice trade on dollar yen last week. And take a look at this on a daily chart. Look at where we are. We are at this last little resistance here in June. If we break through that, there is nothing up until 150. So we've got this potential breakout and run from 145 to 150. There's a lot of pips to be grabbed in there. So the only question is, where's the entry? And frankly, the entry is on any green candle at the first part of this next week. Now look, you all know I don't trade Sunday night unless there's a big announcement going on. I will not be looking to enter this on Sunday night. I'll be looking to enter this on Monday. That's just fine. But this trade is another one that I'm looking for, and I really like it on this daily chart. As you can see, once we break 145, there's a lot of room for this to run until it gets to its next resistance at 150. So dollar yen is absolutely on my list. Let's wrap this up here. Talking about the equity markets. We probably start the week off weak. We probably get that 1 or 2 day pierce below those moving average, and then I think we get a pretty big bounce at the end. So look, this is where I love that Aussie Swiss franc trade. I think it's going to be really good, but I think it's going to be more early in the week, especially if the equity markets are under pressure. After that, then I think we need to review our outlook. If the equity markets do bounce, then I think we need to take a look at something like dollar yen, which is going to be a little bit better. So if we don't get a bounce in equities, so let's say we do get that pierce, but there is no bounce back, we are going to have to come on next week and say, hey, you know what? We are shifting towards a risk-off overall viewpoint of equity markets and risk sentiment, and that might change a little bit how we look at trades. But look, until it breaks, it's all just speculation. You don't know. I don't know. Nobody knows. We'll know. We'll know next week. But until then, we just have to play the market in front of us. That's one of our sayings at Maverick. Trade the market in front of you. Not the market you want it to be. Not the market you think it should be. Just trade the market that is. And right now, it's pretty clear. European currencies doing great. Yen and Australia, New Zealand doing terrible. It's pretty clear. And the dollar possibly breaking out to some new highs. Okay, that's it. That's what the market's doing. I don't know if that's what it's going to do this week, but that's what all the analysis says. That is the Currency Room. Thank you for joining me. Have a great weekend, everyone. Goodbye.